Okay, peeps, welcome back. So today we're going to go over the KLIP ETF dividend announcement. Let's get it. So as you guys can see here, the X date for the KLIP ETF, which is the China Internet Crane Shares Covered Call Strategy, is today. The payment date is going to be in 2 days. So if you did not get in before today, unfortunately, you will not get paid for the end of the month. But as you guys can see here, it is 57 cents per share. That's actually slightly less than the last month. As you guys can see, the dividend yield has been going down slowly and progressively over the months, but that's to be expected because the price is going down. Now, obviously, when the price goes up, the dividend will go back up. It's just a question of when the price is going to go up. So, one other thing I want to point out to you guys right now while we're on this website is if we take a look at the what is it called, the premium discount model, you guys can see up here very clearly on the price that KLIP is $14.61, but the NAV is $15.47. So this thing is almost $1 cheaper than the net asset value of the fund. So that's something to keep in mind. A lot of closed-end funds kind of operate this way, where the best time to get into a particular closed-end fund, especially a diversified one, is when it is cheap and at a discount. So with that being said, I'm going to go over here to the portfolio. Something I actually wanted to show you guys that I'm pretty sure I did not show you before ever on this channel is the total return. So we're going to take a look at that now. So these two numbers on the right here are the 497.25 and the 507.25 are the numbers for the Robinhood portfolio. Let's just go up and take a look actually at the KLIP holdings we have here on Robinhood real quick. Okay, so it changed a little bit, but so now the total return is negative 498.74. So we'll change that. So negative 498.74. You guys are probably wondering why I don't have a minus sign right here. Well, it's pretty simple because it's just easier just to pop the numbers in there. So yeah, it looks like they had some aftermarket trading. That does happen with a lot of these different stocks and ETFs. So we're going to go over total return on both this one and the Webull platform. So the 498.74 is what we're down currently in terms of principal value on this, and the 507.25 is the amount of dividends that we've received. You guys are welcome to go back and add these yourself just to ensure that they are accurate, but we already did that, so we're not going to do it again. But you can see the first dividend we got here was 97.81. That was August 31st of 2023. The second one that we got was actually supposed to be in September, but it was a little bit late. So October 3rd, 108.27. And the third one that we got, let's see if this is actually accurate. So we got October and then again in October, but this first one was supposed to be for September. So the actual October dividend was 104.95. December was 102.06. And January was 94.16. So that total should come out to 507.25. So we're actually, in terms of total return, we are up just slightly under $10. And keep in mind, we have not bought any KLIP shares for a little while. As you guys can see, the last time that we bought any shares of this was back in October. So it's been almost 3 months since we bought this. And we're still green overall in terms of total return. Again, keep in mind, total return is the most important metric when it comes to dividend investing overall. So, when we compare that to Tesla, we are actually down in terms of total return on Tesla. Compared to KLIP, we are actually up on both accounts. And it's true, we haven't bought Tesla in a while, but we also haven't bought KLIP in a while either. So something to keep in mind. Not saying Tesla is a bad fund. We think Tesla could be a great fund. It's just kind of underperformed KLIP a little bit. So for anybody out there that says that KLIP is basically a shite fund and don't buy it and it's horrible and it's garbage and all that stuff, well, the numbers don't lie. So we are in the positive, even though we haven't bought in a long time. So now taking a look at the Webull portfolio. So we'll go back up here to the actual numbers here on the platform. You can see that we're pretty heavily out of the money here. So this equation is pretty simple. Basically, we take our average, which we have not averaged down in quite some time, as I'm sure you guys can tell, minus the current price, times the number of shares. And that's how we come up with that number, 684.48. Now, the total amount of dividends actually far exceeds the cost basis. So this is the number of dividends that we received on the Webull platform. As you guys can see, it is greater than the amount of money that we're out of the money in principal value. So if we go ahead and deduct that from 684.48, we're still up $64 plus the other roughly $9 we have. So about 70, 80 bucks. It's not a huge amount, but the point is the total return is still positive. Again, the number here for the total dividends is 748.60. And we'll show you guys right here all the dividends that we had. You guys can edit for yourself to see if it's accurate, but the numbers don't lie. So the first dividend we received, actually, let's maybe go back even further. Okay, yeah, I guess that's the first one. So the first dividend we received on Webull was on 8/1/2023. So that was almost about 6 months ago now, 95.69. The next one, 8/31/2023. I believe this one right here was supposed to be for July, but this one was 147.67. The next one after that was 137.41 in September, 128.18 in October. You can see up here 124.65 in November, and 115 in January. And of course, we're going to get our dividends coming up in February as well. So that will obviously put us more in the money in terms of total return. Again, you guys can go back and add this up for yourself just to make sure it is accurate, that it is actually what I'm telling you guys it is, because it is. So one more thing I want to look at with y'all before we end this video is the current price of KWEB. So we'll just go ahead and pull that up real quick. So here it is. Okay, so KWEB, we're going to go to the weekly time frame. This is the one we usually look at in terms of highest time frames. Something I want you guys to keep in mind here. We are still in the support zone. Okay. So I want to point something out to you guys. Every time we have entered into this support zone, we have had a bounce of some kind, okay? So this is the charts. The charts don't lie. It's telling you the story in real time here. When we hit the support zone here, we bounced about 30%. That was the most recent times. Back here during 2022, which keep in mind, that was at the bottom of the bear market for the US stock markets. During October 2022, we had 106% bounce on KWEB, and back here during March 2022, which was when the Fed started raising rates, we went up a total of roughly about 67%. And this is on the macro decade-long support zone that we have talked to you guys about before. Nothing has changed here. We are still sitting on support. It has not been broken. Obviously, if it gets broken, that would be concerning, but considering this is a decade-long support, I would say that I'm not going to say there's a 0 chance that it could break, but it's pretty slim. And once again, as you guys can see, every single time we hit this thing, we just get a massive, massive move up. As you guys can see, it went up 159% in total from this point right here in 2015 to 2018. And then it went even higher. Well, basically from the bottom here at the support way above this resistance. But even if we were to measure it, like let's say from kind of this support area right here at about 39 bucks, you're still talking almost 171% returns. So we're sitting at the support zone, guys. I don't know. I mean, it's possible that a pop to the upside might happen. We'll just have to wait and see. Obviously, we would need to also break this downtrend line. that you guys see right here. Once we get a close above that and the EMAs, I would say it's pretty much on at that point. We are heading higher, but we'll just have to keep you guys updated. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.